Well, good morning and thank you for joining us. You're watching Business Check, or what we call Biz Check Live here on KBC. And of course, I told you that our conversation this morning, we want to have a look at the mortgage markets, or what we call the affordable mortgage market, bearing in mind that the size of the Kenyan mortgage market is very, very small. And you're looking at less than 2.3% and less than 310,000 mortgages issued in a market that is the biggest in the East African market. And so the question is, what is impeding the growth of the mortgage or affordable mortgage market here in Kenya? We're talking to the Chief Finance Officer at Kenya Mortgage Refinance Corporation. And this is Nyale Yanga. He's going to help us in understanding what are the bottlenecks and how can they be addressed. Thank you very much indeed, Nyanga, for joining us. Yanga, for joining us. When you look at this market, what conclusions do you draw?
Thank you. And I think that's a very good place to start the conversation. If you look at the mortgage landscape, it's actually divided into two parts. There's the demand side and also there's the supply side. When we talk about the supply side, we're looking at how are these houses built? What are the sources of funds that are enabling people to build houses? And we're looking at players like the developers who need to source for capital to build these houses. We are looking at the government, for example, which is currently putting up the affordable houses. And then you're also looking at the demand side, which is then how, after the houses have been built, how do we enable people to own these houses in a more sustainable and affordable manner? So in this space of the demand side, then we're looking institutions like the banks, like the SACCOs, and institutions like us, like Kenya Mortgage Refinance Company, which facilitate then people to own houses. So if you look at this landscape, and of course historically, mortgages have been quite expensive. Capital for putting up the houses themselves have been quite expensive. But one of the interventions that Kenya Mortgage Refinance Company now brings into the table is to allow Kenyans now to own homes affordably. That means with lower interest rates, below 10% interest rates. We have also been able to lengthen the repayment period of these loans, and I'm going to explain how we do that. To the extent that when, before KMRC came into being, the average loan repayment period was around 8 years.
8 years.
8 years. So for SACCOs, it was around 3 to 5 years, and for banks, around 6 to 7 years. What that means is that then people have a shorter time to repay their loans. That means the monthly repayments are quite expensive. So what we have done since inception is to lengthen that by providing long-term liquidity to the banks and SACCOs, so that they can also on lend to the end borrowers. We've been able to lengthen that loan period from around 8 years to now around 13, going to 14 years. So that's one aspect that brings affordability because it lowers the monthly repayments. Number two, if you look at the market mortgages, they are at market rates. Currently, you'll be getting a mortgage at around 16–17%, again, depending on your risk profile and how your bank or SACCO has assessed you. With the coming in of Kenya Mortgage Refinance Company, we have then been able to fix those rates. So through the KMRC product offering, somebody can get a mortgage at single digits for the rest of the lifespan of that mortgage. So if it's a mortgage of 10 years, you continue paying with the same interest rate. It doesn't change irrespective of the fluctuations of the economic cycles. And so that brings predictability. It ensures that then people can plan better and actually pay at lower rates for the duration of that period. And then thirdly, of course, I talked about longer repayment period, and we provide facilities that Kenyans can repay their loans up to 25 years, which then brings affordability to this sector.
And the fact that, we are here talking about affordable mortgages. It's a reality that mortgages have been expensive in Kenya.
Yes.
Are they getting cheaper?
Yes, so they are getting cheaper. Remember, I indicated that market rate mortgages were in the tune of around 16–17%. They are still there if you're looking at market rate mortgages, because as Kenya mortgage refinance companies, we don't cater for the entire market. We have a target segment of the middle and lower income category of the population. And so we look at mortgages of 10.5 million and below. So if you look at Kenyans who have been able to access mortgages through the KMRC product offering, they've been able to do this at single digits at 8.9%, 9.5%, 9%. So that tremendously reduces the cost of mortgages. If you compare 9% and the market rate of around 15, 16%, that's almost half of what somebody would pay in interest for a market rate loan compared to a KMRC facilitated loan.
And of course, when the government was forming the Kenya Mortgage Refinance Company, corporation, the whole point was to come into the market and enter the market, offer affordable mortgage to Kenyans. Because we've been stuck at about 30,000 mortgage products or mortgage accounts in Kenya, for quite a long time. So 6 years down the line since you entered into the Kenyan market, what is your performance?
So if you look at our percentage of mortgages that we have been able to refinance against the numbers that you quote, around 30,000, will be around, because we have done around 6,000 mortgages, so that's around 6,000 divided by 30, that's around 5% or so. But it's also important to indicate that the 30,000 mortgages that we keep on reporting, the numbers are still a little bit skewed, because those are mortgages generated only from the banking sector.
The commercial lenders?
Yeah, from the commercial banks. Remember, we also have the SACCOs who also do mortgages. And statistics indicate that around 70 to 80% of people who borrow loans through SACCOs actually put those funds in housing. Either they are going to buy a plot, or they are going to start construction of their houses, or they are going to buy a plot and do construction of those houses. So realistically, we are looking at more than 30,000 mortgages in this country. It's only that the data is a bit segregated. In terms of performance, of course, having started around 5-6 years ago, we still have a long way to go. We can't say that we have done a tremendous impact, but we are making better strides towards making mortgages affordable and increasing the numbers of mortgages in this country.
And when you look at the Kenyan market, and it's one of the biggest, the real estate sector in Kenya is one of the biggest in Africa, I think ranking at number 4. But the number of mortgages, it's quite very small. Why do Kenyans prefer to buy or build instead of buying a house on mortgage terms?
Yeah, that's a very good question, and I think it's a historical factor that people have been shy to take mortgages or bank facilities to finance home ownership. And it's important to indicate that many Kenyans, of course, you will have seen they prefer building in terms of incremental. So somebody takes a loan, buys the plot, then they go and take another loan. They do the basement, and probably after 3 or 5 years, they're able to own a home. That is a very inefficient way of home ownership. People have been scared about the interest rates, that they're high, and sometimes they change when the economies change. And that's why with the KMRC intervention, we have been able to ensure that then these rates are fixed for the duration of the loan. And what we are telling Kenyans is that don't build for a long period of like 5, 6, 7 years. You are still borrowing and building in piecemeal. By the time you are getting into that house, probably even the fashion has changed. The children which you are really trying to put a roof over their head, they have all gone to universities, and they are all independent, and they are out of the house. So take a mortgage now, which is affordable, acquire the house now, move in and enjoy the family as the family grows. I think historically, because the mortgages have been fluctuating, the interest rates have been quite high. At some point, mortgage rates were around 20% or so. So that can be an inhibiting factor. if you look also on the supply of those houses, for a long time also, the houses that have been supplied to the market were the high-end houses, if I may say. And so the production or the supply of houses which are also affordable in nature has actually been limited. So that has been bringing that challenge. But by the virtue of KMRC now pushing people to own homes below 10.5 million, we have also seen the supply side with developers now coming in and constructing houses to fit that market.
Yeah. Let's, for example, and I mean, when you look at the Kenyan market, you have about 4 million people, in formal employment. Yeah. And this is a market, that everybody is fighting for.
Yeah, exactly.
Because the market of unsecured loans is very, very small. Let's take, for example, KMRC. I mean, on average, your interest rate is about 8.9%
Yep.
over a period of 25 years.
Yes.
So who qualifies, to take a mortgage under KMRC?
Yeah, so that's a very good question. Number one, we do the mortgages at KMRC through the already existing banks and circles who are in the mortgage space. So an individual who wants to take a home loan, and by the way, we have changed the term from a mortgage to a home loan so that then it can be a bit more palatable to people, because people had bad memories of mortgages when foreclosures were done. Yeah. And so if you look at, so number one, the person does not need to come to KMRC. They will go to their bank or SACCO, which they have been a member for quite some time. And that is where they'll get the interest rate of 9%, 8.9%, depending on the bank.
Are you working with all the commercial lenders?
All the commercial lenders,
and
all
SACCOs?
The SACCOs, as long as they are in good standing with the Central Bank of Kenya, and they are offering mortgage products. Yep. And so if you look at all that scenario, then we facilitate both the formal sector and the informal sector. Traditionally, of course, the banks were very skewed to the formal sector, the people who have a payslip, and those are, you're saying, about 4 million people only. But then what does that leave the entire of the population? We estimate that around 84% of the working population are in the informal sector. These are people who don't have a formality of income. There are people whose income is cyclical in nature. So somebody probably in the tourism industry who gets a job in 6 months, then after 6 months they're laid off or something like that. Or somebody who is in the market, who is a shoe vendor or a tomato vendor. And so their incomes are not predetermined, they're not constant. So what we have done as a mortgage refinance company is to have a mechanism of enticing these bank and SACCOs to lend to that sector. And how are we doing that? We are de-risking the banks and SACCOs to actually start lending to the informal sector, such that if you offer, you generate mortgages, a portfolio from this informal sector, and we're actually looking at the very bottom of the economic pyramid of people who can take mortgages of a maximum of 4 million Kenya shillings. So that basically targets a variety, a big percentage of the people in the informal sector. If a bank or a SACCO signs with KMRC and they're able to generate a portfolio of mortgages from that sector of the population, we take a percentage of that default risk. So if, for example, they will lend O'Brien at 4 million Kenya shillings, and O'Brien has a balance of 2 million Kenya shillings, and the unfortunate event that that person is not able to repay the loan, then that loss that the bank was to take is divided between the bank and the KMRC.
Let's, for example, take the 4 million shillings. I mean, a mama mboga or a baba mboga, wants to buy a house valued at 4 million shillings. They don't have a constant supply of, or what I would call a constant guaranteed supply of revenue. And we all understand the risks involved in Kenya's informal markets. It's very cyclical in nature. And it's because of various shocks. So it's not very stable. So if a mama mboga wants to apply for a home loan, it's, let's say, a certain SACCO, what are the requirements are they supposed to meet?
Yeah, so number one, of course, this Mama Mboga would have identified the house that they want to buy or the plot that they want to buy and build that particular house. Now, once they do that, of course, there are the very basic things that you need to do. They have to, if it's a plot, then it must have a title. If it's a house, it must have been fully completed and it has a title to it. Now, once they're able to satisfy that and they go to their bank or their SACCO, since they don't have a payslip or a document which shows that every month they're getting this amount of money, there are some documents that they can provide. For example, every day they go to the market and buy, say, vegetables or tomatoes, and they sell at the end of the day. So do they have M-Pesa statements, for example? Because most of them would operate with the phone, mobile money transfer services. So do they have statements to that extent? At the end of the day, are they able to put that money into a bank or into a savings or even to a chama? So it's a consolidation of all that information that they will take to the bank or SACCO and say, I wake up every morning, I go to town, I buy and sell tomatoes. Every day I get an income of 3,000, 4,000 Kenya shillings. If I subtract my expenses, probably I remain with this extra amount of money. In a month, in a good month, I would maybe make it 20, 30,000. In a bad month, I'll make 15 or so 1,000. And these are my household's expenses. So the banks then, or the SACCO would analyze all that information and tell this borrower that according to your income level and the level of your business, this is the amount of loan that you would qualify for a house. So whichever nature you look at it, if it's unemployed, the payslip will be the easy to go. If it's in the informal sector, any type of statement that they have, that they can show a bank that this is where my money passes through, that will be enough for them to qualify and be given a mortgage.
And of course, I mean, when you look at the markets, the government has also been very aggressive in the supply side, whereby now you have thousands of affordable houses that are under construction, and also through policy, you know, at the demand side, the government has also been very aggressive in coming up with policies and of course institutions like KMRC, so that you can spur the market. When you look at the affordable houses project by the government, are you seeing growing appetite for Kenyans willing to take a home loan to buy affordable houses?
Yes, we are seeing a lot of appetite. I think just yesterday we were having engagements with the CEO of the Affordable Housing Board, and they were indicating that all those projects which are now fully completed have actually been fully taken up. And I was giving an example of the Mukuru project here along Mombasa Road. They've already been occupied, and some all over the country. So there's a lot of appetite. I think what we need to do as a country is to see how best then do we facilitate these people to actually own these homes in a more sustainable and affordable manner. Because on one side, the government will have done everything to bring out the units, but on the financing side, where KMRC plays and where the banks plays, is how lower can we bring the interest rate of these mortgages, so that currently they are enjoying around 9%, 9.5%. What do we need to do to reduce this interest rates to be around 6-7%? If you look at other developed markets, the rate of mortgage loans will be around 2 or 3%. So if you look at that rate, then it is extremely affordable and people can own homes in an efficient manner. So we should all work and bring our heads together to see, in as much as already it's affordable if you compare to market rates, but how lower can we bring it down?
We have some markets, and more so in the developed markets, markets like Switzerland, Japan, where mortgage loans are priced at 1-2%.
Exactly.
How do we get to that level, so that, because I know pricing is a problem, because if you're telling somebody to pay a mortgage for 25 years and you're talking about 25 years, you multiply by 9, that's a significant interest rate. So how do we make it even cheaper, bearing in mind that yes, we are seeing efforts where government as well as the private sector have been very aggressive in ensuring that you drive down the cost of mortgage in Kenya?
Yeah, so number one is it should be a deliberate effort by both the private sector and the government to lower down the cost of mortgages, and that can also be achieved by ensuring that government does not come to the market and borrow at high interest rates. If you look at those markets where a person can go to a bank and get a mortgage of say 1 or 2%, if you look at the rate of their treasury bills or treasury bonds that the government offers, they would be in the 0.5%. There are some countries whereby you actually give money to the government to keep the money for you. So it's like you are getting a negative return. So if the rates of government borrowing is down and efforts are there to make it go much down, you'll find that then the banks and the SACCOs do not park their monies in treasury bills and bonds. They have to lend out and do their core business. Currently, if you look at our market structure, you find that then the treasury bills and bonds are at around 9%, 10%, sometimes much higher than that. And so a business, because the banks and the SACCOs are businesses and they have to make returns to their investors, they are more comfortable putting that money into that high-earning instrument as opposed to loaning the Kenyans. And so the effort that needs to be there to get into those markets probably in the future is to ensure that the cost of funds is as low as possible. If, for example, our total cost of funds will be, let's say, 0.5% or 2%, we'll be able to translate that and ensure that Kenyans get funds at even much lower rate than we're currently doing. Yeah.
I mean, for the last 6 years, I mean, of your existence as KMRC, how much have you managed to lend to commercial banks as well as other lenders?
Yeah, so I think so far we are at around 34 billion.
34 billion
Kenyan shillings that we have refinanced through the banks and the SACCOs, translating to around 6,500 mortgages.
6,500.
Yeah, these are Kenyans which have really benefited from the mortgages.
Yep. If you are to perform optimally, how much are you looking at?
So if in our business model, our optimal performance will be the impact that we have created in the market. How many people have we been able to house? How many people have we been able to uphold their dignity and they're able to stay in a home which is affordable and they're able to pay for that? So in our approximation, for example, in the current strategic plan that we are in, we are hoping that by 2029, we'll have done around 57 billion Kenya shillings in terms of mortgage refinancing. And moving again into the future, the more we do, the better. We are looking more on impact than just the numbers of billions that we have refinanced, but how many people have we touched and how many people have we enabled to own these homes in an affordable manner. Yeah.
And is there anything that we need to do, you know, from a legal perspective, from a policy perspective, from where you see it, that you believe can unlock the mortgage market in Kenya?
Yeah, I think quite a number of things. One, I think it's more of financial awareness to people, and this is a continuous exercise that both the private sector and the public sector must continue doing. People must be sensitized to know that owning a home through the mortgage route is much more efficient. It's cheaper now that we have KMRC offering, and you actually get the ability to own that home immediately and pay later over, they say, 9, 10, 15 years. So it's the most efficient way to own a home, number one. I think that education needs to be done over and over again. Number two, I think it's also about our financial structure. The cost of funding is still quite expensive, both for the developers who want to build the units, as well as also for the banks and SACCOs who also want to on lend. And so it is a bold but more strategic level at national level to see how best then do we change the macros and ensure that then the cost of capital is brought down. When the cost of capital is brought down or goes down because of strengthening macroeconomic fundamentals, you'll find that then the production cost of those units will be lower, and also the financing cost on the bank side will be lower. And by that, then we bring more affordability to Kenyans, and more Kenyans will be able to own homes.
Should we allow KMRC to get into the retail market?
Well, right from when KMRC was formed, that was not the business model, and for two reasons. Number one, already we have the banks and SACCOs who are in that space. So you don't want to come as a new institution and replicate what is already working, because going into the retail space, then that means we are replicating a bank or a SACCO, and people are coming to us and we're giving them mortgages.
But they have always been there, and the market has not been growing at the rate that is desired.
Exactly. And why hasn't the market been growing and they've always been there? There has been a challenge of liquidity. So if you look at any bank or any SACCO, they would generate mortgages from the short-term deposits that they have, and these are our deposits they collect, and then they on-lend them to the end borrower. Now, for as long as they don't have enough deposits, they cannot also on-lend much in terms of mortgages, because they enter into a maturity mismatch. The deposits that we have are short-term in nature, and so they cannot on-lend to Kenyans at longer tenors. So the intervention that is there, and which we complement the whole banking and SACCO infrastructure, is to provide them with that long-term liquidity, which was missing. So instead of us playing directly in the retail market, we offer long-term liquidity to the banks so that they can unlock that tenure and reduce their mismatches, and they're able to now to transfer that benefit to Kenyans.
Very good. Nyale, I mean, unfortunately, time is not on our end. We have to wrap it up at this point. Your time is highly appreciated. Let's keep the conversation going, because ultimately we want as many Kenyans as possible to access the services of affordable mortgages.
Thank you so much for having us. Thank you. We appreciate for those who may want to reach us, they can reach us in all our social media handles for any information that they need. We have an upcoming conference in Lake Naivasha Resort, which will be discussing many things about affordable housing, from the policy side, from the practitioner side, and also benchmarking from other countries where this has been done and become successful. So thank you so much, and welcome everybody to join us.
Thank you very much. Let's keep the conversation going on.
Thank you.
Well, Nyale Yanga is the Chief Finance Officer at the Kenya Mortgage Refinance Company, joining us this afternoon, actually, to help us understand how do we unlock the affordable mortgage market here in Kenya from a policy perspective, as well as from a pricing perspective. And of course, you have heard it from him.